There are financial mistakes that I made at the beginning of my business that almost cost me my growth and my business. Sawubona, my name is Sibiyana Mthandazo and mina ngiyingane kaGogo. Welcome to the Mentorship Corner, my YouTube channel. This is a space where I'm going to be sharing some lessons that I've learned in business, life, and basically growth. So I've got some notes. I haven't done this YouTube thing in a while, but also today's video is going to be really packed, so I don't want to miss Isn't Balekile. Today I'm going to be sharing 5 finance lessons that I have learned since I started optometry. So I know speaking about finances and money in terms of running a business is always like a little bit of a taboo topic, and it's usually something we do not like to discuss. But the truth and the reality is, if you do not confront your finances, if you do not learn from your financial mistakes in your business, you are not going to have a business, because a business in essence, apart from just solving a problem, but it's a money making machine. It is there to make you money so that you can live the life of your dreams, or you can live out your purpose in life. But without the money, you don't really have a business. That's why they say if you're not making any sales of that particular product or service that you're saying that you offer, then essentially you do not have a business. You just have a hobby that no one is really paying you for it, because even though you get some sales, but if you're not really making money or any profit out of your business, then yeah. But that's not to say you're going to make profit immediately, but it's just to say that you need to make money out of your business, and the business needs to make you money. So let's go to lesson number 1. I think before I get into lesson number 1, a little bit of a backstory. Optometry was started and founded in January 13, 2024. The idea was started in 2023 because I had decided to resign at work, and my parents were like, you know what, you've been resigning quite a lot, emsebenzini, and we think it's time that you start your own thing, and that's how Optometry was born. The first lesson that I've learned is that underpricing your services or your products in the beginning is not really the best way to go. It is very important in your business to understand that the right customers will buy your products. The people you are solving the problem for will buy your products. And the fact that you are underpricing may sometimes actually push away your customers, because if you underprice, one, you are decreasing your profit margin. So to explain what a profit margin is, it's like basically how much money you're going to make after you've marked up, the product that you are offering to your customers. How much money do you get to keep for your operations, as well as making a profit out of that transaction. So if you underprice, you will have a lower margins, which means you won't really be making a lot of money in your business. And sometimes some of us, we don't even add, I know I didn't do this, I didn't add my overheads, rent, and all of those other costs that go into me being able to deliver that particular product or service. The second thing is that when you underprice, in some cases it's because you undervalue your product or service. And because you are underpricing, you then attract the wrong customers. You know, those bad customers who just want cheap, and they still want to get like a really good service. They want cheap, and they still want, like, someone who has a budget of like a very small budget, but they want like a really premium products and premium services. You are going to attract that customer, and best believe you do not want that customer in your business. I've been there. You do not want that. I think the third thing is that you then don't price for sustainability and growth in your business. So I did that when I started. I thought the best way to beat my competitors was to charge cheaper for my products and services. And a couple of months later, I realized that I wasn't really making money in my business. And because I also personally perceive cheaper products or services as low quality and lower value, I started perceiving my business as a low quality and low value business. So that really affected how I operated in the business. It affected how I was communicating with my staff, how I was communicating with my customers, and it obviously affected my finances and business. So it is very, very important. Nomdeni once said that it is very, very important to charge for sustainability. So when you are choosing a price for your business, yes, you must check how much it costs. Yes, you must check the quality of that particular product. But I believe the most important thing, as Nomdeni said, for you to check when you are pricing your product is, if I'm pricing this product at this particular amount, will that amount be able to sustain my business, and will that amount be able to grow my business? So if you are covering rent, if you're paying salaries, will the amount that you charge for your products or services cover your overheads as well as give you a profit at the end of the day? Because the bottom line is, you want to charge an amount that ensures your business is sustainable and it actually lives on to see year 2, year 3, year 4, year 5, and actually grows and becomes a profitable business. All right. So ensure that your pricing is not informed by the fact that you think charging the lowest amount in the market is going to get you more customers, but it is actually informed by your profit margins that you want. It is informed by the costs that you incur for delivering the product or service. That includes your staff, your other overheads, as well as it must be a price that would make your business sustainable, so that you know, we'll see 12 months from now, I will still have a product. All right. The second lesson that I've learned is some inventory mistakes that I made. So when I started the business, I invested a lot of money in buying stock that would sustain us for the first 2-3 months of running the business. What I then did was I just listened to what my customers were telling me without actually paying attention to see how that affects my business in return. So when my customers wanted a premium brand, or like branded frames, they wanted branded frames, branded sunglasses, I would just go ahead and negotiate with the brands and open an account. So I know that I've got 2 accounts that I had to open, and 2 months down the line, when the very same customers who had requested those accounts were not paying for those brands, it became a problem for me and not the customer. So I think it's very important to try and understand your inventory. So understand how many products you need for you to actually become profitable. So I think going back, you need to just understand how many products you need to sell for you to actually break even. So breaking even in business is that it means that your expenses are the same as your income. So you didn't make any profits, but you also didn't make any loss. So if, for example, I need to do 10 eye tests so that I can pay all of my expenses for the month, that means that I have broken even and I didn't make a loss, nor did I make a profit. So you need to ensure you understand what is that break even moment for you as your business. Number 2, you need to also understand your seasons. So there are seasons in your business where you're going to be extremely busy, and then there are seasons in your business where you're going to be quiet. So for the busier seasons, you must kind of learn how to prepare for that, so that when the busy season comes, you have the funds and the funds to buy the stock. Actually, you have the funds to buy the stock that is required for that particular season in your business. And don't make the mistake that I made, where you just listen to your customers but you don't actually go back and check the financial standing of your business and what your business actually needs and who you are basically serving. So I just followed blindly. I got 2 accounts that I'm still paying till this day, because it was with our products, you have to take like a bulk amount of frames as an opening purchase. So I did take those bulk amounts of frames. The other brand sold a little bit quicker, so I'm able to pay it off, but the other one I'm still trying to sell now. And the customers who had said they wanted that particular brand didn't buy the brand. So you don't want to make that mistake where you just follow your customers blindly. You want to make informed decisions in your business that are driven by the data and the statistics that you see in your business, so that you can make proper inventory decisions and avoid the mistakes that I made. All right. The third lesson that I learned, it's basically tied to the first one, which is underpricing. The third lesson that I learned is that you need to learn to price based on the sustainability and growth of your business compared to just being the cheapest person in the market or being like the preferred person because of price. You need to understand what value you are bringing to the market. You need to understand what problem you are actually solving for your customers. And if you communicate that properly to your customers, you can charge them the amount that would be sustainable for your business without straining your finances. So it is very, very, very important to go back and really, really look deeper and calculate what is a sustainable pricing model for my business so that I'm able to keep the business going for the next couple of years and also be able to grow and obviously scale your business as you grow. So that is very, 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 very important. Price for sustainability and not fear that people are not going to buy from me, people are not going to choose me, I'm not going to get customers. Your customers will always find you. Unomdeni again once said, if they are complaining about your price, but you have people who are buying from you, that means they are not your target audience, and that is fine. You need to fix problems for your paying customers because those are your target customers. All right. The fourth lesson that I've learned is that you need to reinvest the money that you make in the business back in your business. All right. The first couple of years of business are very, very hard. I'm like living evidence of that. Like the first couple of years, the first 2 years of my business were very, very difficult. It only started getting better last year towards the end of the year, but 2024 was very hard. And a very good friend of mine, I call him my other dad, he said to me, Nomti, if there's one thing that I can tell you about starting your business is that you need to just focus on keeping the lights on and don't close your doors for the first 3 to 5 years. And he was so right. So what I did for the first year, even when there was days where I was struggling, I couldn't pay my rent, I couldn't sort out things, I went back to my suppliers and I negotiated. I went back to my landlord and I negotiated. And there were months where I just ran away. But the bottom line is I kept the lights on and now things are starting to look a bit better for the business. I kept the lights on, and then the money that I made, I didn't really withdraw it for my personal gain. I took the money and I reinvested it back into the business. Last year, another thing that I did was I took a job on campus at UKZN so that I can fix my personal finances and start reinvesting some of the money that I was making from campus into my business. I just believe that it's very important to understand what your business is not going to take off unless you're very lucky and you post a video that goes viral on social media and then everyone just wants to buy from you. But for most of us, it's the traditional route. You have to wait it out. People need to test your products, you need to test the markets before they actually trust you. You need a couple of years to build trust, and it just takes a while. So every money that you make, you need to be able to reinvest back into your business for growth. So I reinvested for marketing, so now I have like a marketing budget in my business. I reinvested for staff. I now have a permanent staff, I have a local optometrist, and I have a temp staff when Nomfundo is not around. I reinvested back into my business for equipment. So as each year comes, I have a target. It's okay, this year, by the end of the year, we should have gotten this amount, this much, this particular equipment. We should have gotten maybe like saved this amount so that we can pay this particular thing off, and so it is very, very important. And I think just still in the spirit of reinvesting back into your business, have goals in your business that govern how you spend your money and where your money goes, so that kungapheli unyaka and you don't know what you did with your money. Like by the end of the year, you need to reflect and say, oh, okay, we had goal 1, 2, and 3. We were able to achieve goal 1 and 2, even though we didn't do 3, but we were able to tick off the most important goals that we needed to achieve for that particular year in your business. All right. Then we are moving on to the last lesson that I've learned, last finance lesson that I've learned. This one has been a very like a game changer for me, both in my business and in my personal finance space. This one is know your numbers, like understand like understanding my business numbers better. So in first year, I had an accountant, but I didn't even know how to read like a profit and loss statement. I didn't understand what cash flow was. I understood what a profit was, but I didn't really take it back and make it more practical for myself specifically. So it is. I just think it is very, very important. I know it from experience to marry your numbers. That's what they say. So go through your bank statement, like for your business account, and understand how much money comes into your account, how much money goes out of the account. The money that comes in, where is it coming from? The money that's going out, where is it going? The second thing is look at your profit and loss statement and look at how much cash you have in your business. It's very, very important. The amount of cash you are able to retain in your business determines whether you are able to pay for important things that are like daily operational things in your business properly without any hassle, and they call that cash flow. It's very, very, very important. And I think that the other most important thing about knowing your numbers is learn very earlier on in your business to separate yourself from the business. So have your own personal account on one end and have your business account on one end, and then each month or each week, depending on how you want to play it, assign a specific amount of money that you pay yourself as a salary from your business, and you pay it into your personal account so that you don't tamper and interfere with the business account. Right. Another thing that is very, very important about knowing your numbers is really look deeper and understand your profit and loss statements. I was able to pick up that I was paying a lot of money on subscriptions. There were certain things that I was just spending a lot more money on particular expenses, and that just wasn't working for my business. So I went back, like I sat down with my accountant, and we literally went through everything, and he was like, okay, this and this and this and this is a red flag for your business. We need to review, renegotiate, and one of the things that really, really helped with me and the growth in the business with my numbers is that he said to me, we need to have fixed expenses so that we know, we'll see, this is how much money the business is paying for Wi-Fi, this is how much you're paying for this particular thing. And these are our fixed expenses for the month. And then our variable expenses must be so minimal that it's just like those other expenses like printing, going for an event sort of thing, or maybe buying, like trying out a particular product, but we need to have set like fixed monthly expenses for almost everything in the business so that there's predictability. So we can predict, okay, fine. On a monthly basis for the rest of the year, this is how much money we need for us to break even, which means if we make this money and more, we are able to become profitable. When we become profitable, where is that money going? And. So very, very, very important. So my 5 lessons summarized. First one is understand, don't underprice, guys. The lesson that I learned is that underpricing is not good for my business. All right. The second thing that I learned was that I need to actually understand my inventory and my stock and not just make decisions out of nowhere. So understand your inventory mistakes. Don't hold too much stock. Don't just follow what your customers are saying, but make calculated decisions on that. Number 3 is basically price based on sustainability and growth of your business, and not from fear that people are not going to buy from you, because the right people will find you if you are really solving a problem that needs to be solved, right? Number 4 is the importance of reinvesting money back into your business. Okay, buy that equipment, buy that new stock, try that brand that your customers have been recommending for the past 5 months that you kept saying you're going to try. Do it because it's going to help you to grow and scale your business. And then the last and most important one is understand your numbers. Okay, they say marry your numbers, so understand your numbers, because if you do, life will be a better place. Trust me. And your business is going to grow and you're going to thrive. In closing, I just want to say that it is very, very important to learn financial literacy from a very early point in your business, like from as soon as possible. If in your personal capacity you are not financially literate, I would suggest you get on with the program and make sure that you learn as much as you can. Banks usually offer financial advisors at no charge. They just charge you like for the products, like a percentage from the products that they do recommend for you that you do take. So get yourself a financial advisor, read finance books, listen to financial podcasts. To recommend a few, read books by Nicolas Mashile, Napalo Mako, I can't remember her name properly, Dave Ramsey. And then in business, also same thing, become financially literate in your business so that you understand what's happening in your finances. If you are not sure, get an accountant who is actually for your business and ask them questions. Like, ask them the difficult questions that you don't understand. When they suggest something, ask them why this is suggested, and just understand your finances from as early as possible, because financial literacy is one of the biggest things in your business that are going to help you to grow your business, and they're going to help you to move your business from just trying to actually building and growing, and as well as like thriving eventually. All right, I love you absolutely a lot. If you did like this video, please give it a thumbs up. Please share the video with someone who could learn a thing or two from the lessons that I have shared. If there is one lesson that you have learned, or a couple of lessons that you have learned running your business in the past couple of years or in the past couple of months, please leave them on the comment section down below. I would love to hear from you. Yeah, love you lots. Ingane kaGogo is signing out.